Hello. Good evening, everybody. Welcome again for another month to our monthly engagement of the pre-NFP webinar that will help you anticipate for today's NFP figures. My name is Stavros Tisios, and I'm the market specialist for FXPRIMUS. Before we get started today, I'd like to tell you a few important things about our company, FXPRIMUS. We're globally acclaimed for offering one of the fastest and most secure online trading environments anywhere in the Forex industry. Our extra measures in safety have positioned us at the front runner in responsible trading. And we are now setting new standards in safety amongst our counterparts in the Forex industry. The company enables clients of full experience to trade over 120 instruments, including currency pairs, commodities, CFDs, indices. Our award-winning safe trading environment is founded on the proven philosophy of success through security. We do set the benchmark in safety for our industry-leading safety mechanisms. We're the first to offer client fund insurance coverage of up to 2.5 million euros per claim and offer third-party monitoring for clients' withdrawals by Boudica Client Trust. Here in FXPRIMUS, we're going the extra mile to offer you protection unseen anywhere else in the industry. Now a little bit about myself. I have traded professionally for a few years and I have done this successfully, and I'm just now involved in the Forex market industry as a profession because I used to trade. I was a retail trader from home, and I decided to just share my knowledge, become a specialist here in Limassol in Cyprus, so that I can pass on my knowledge and share my knowledge pretty much with all of you retail traders and even also the experienced traders. I want you to feel free to connect with me on Twitter, LinkedIn, or send me an email if you feel so. Before I go ahead, I need to read to you the risk disclaimer. Please note that Forex trading and trading in other leverage products involves a significant level of risk. It's not suitable for investors. Trading financial instruments varies only loss as well as profits, and your losses can be greater than your initial invested capital. Before undertaking any such transactions, you should ensure that you fully understand the risks involved and seek independent advice if necessary. Any opinions, news, research, analysis, prices, or other information contained on this webinar or linked from this webinar are provided as general market commentary and do not constitute investment advice. FXPRIMUS or its representatives do not accept liability for any loss or damage without limitation to any loss of profit which may arise directly or indirectly from use of or reliance on such information. Now, today we are going to go through again our monthly usual. We will see the market tone in general, so what's happening with the euro, the dollar, and the European and the US economies, how they have performed, as this report is actually setting the tone for the next of the year following a previous NFP in January and also the FOMC at the end of the previous month. We'll look at the economy's expectations and if they are realistic, of course, if the projections are realistic. And we'll look at the hourly earnings and also the employment rates. We'll look into the other employment components as well, the ISM and the non-ICM, manufacturing employment indexes, the ADP, the challenges report, and other stuff that they are pretty useful. Most likely, we are also going to check the markets, see if we have any squeezes, any liquidity, low liquidity, and we'll check maybe the bonds, commodities, and the equities markets to see what's happening with inflation and business activity before we go through on the charts. So let's just jump straight to the charts right now to see what has really been happening. So we'll close this. So Euro-Usd, this is the hourly chart. We have seen that it's been going up over the past few days. We did have a small correction on the 18, between the 15 and 18, and then had another extension up, another down move just a few days back, and now we are actually just made a double top over here at this level. On the dollar yen, we'll have a look at that in a minute, but before we do so, what I want to do is have a look at the interest rate differentials between the EU and the US. We all know that we had the FOMC, federal funds rate, the past Wednesday, 2 days ago. The federal funds rate remained at 150. But on the previous one, we saw an increase from 125 to 150. Okay, the European interest rates, we all know that in the Eurozone, the rates are around 0%. Okay, so the US is at 150. So this differential is actually widened now. This should, the spread moved in the dollar's favor, as the Euro rates are actually close to zero. Now, the Wednesday FOMC rate decision gives us some clues for the first hike. Actually, this year from the US is going to be in March 2018, and this is the reason on Wednesday we saw this decline in euro dollar. Okay, the euro dollar fluctuated following this hawkish minutes on the Wednesday, and it found support at 124. Okay. So let me just draw this. 124 is pretty much here. Okay, you can see this found support over here. And while the dollar yen rose as a result of a weaker yen, okay, owed to mixed fundamentals. Now the US dollar has started the 2018 on a negative footing, okay, with the index falling the most, the dollar index, in a year. Now, as we're here already, this is a psychological level for me, the 14 level. It could be a level that can be reached, but not in today's NFP, okay? What we can do is draw another level over here on the top, which is the 125.18. This is our resistance level. If we go a little bit closer, we can also draw another line over here. This is another important level that may be reached today. Okay, now what we can also do is just count this wavelength with a Fibonacci retracement from the lowest to the highest, and see that what other levels we can actually maybe just keep an eye on for this NFP today. So we really see that this level is really close. Those coincide, the Fibonacci level and the support we just draw. Also, those two levels coincide as well. And this level is a double top, which could easily, be a fake breakout over above this level. Now, looking at the divergence in interest rates, because I'm talking about Euro-USD only, we also have the dollar yen, which is normally the right choice to trade. It's always the purest one to trade. But if you look at the interest rate differentials, I think this is from FX Street. They have some data. We can also identify some other pairs to trade. Okay, that's not this one. 1 second. Rates and charts. Oh, hold on. That was the one probably. No, it's not. Anyway, what I wanted to show you is that depending on the interest rate differentials, this is how we should pick a pair. For example, the Swiss franc is on a negative 0.75, I think. So dollar is at 1 plus 5, 1.5. So this is the differential is about 2.25. Okay, so this is the weakest, one of the good options to trade today. Okay, also the New Zealandian with the Swiss, it has a big differential, as well as the Aussie. Okay, so this is fundamentally speaking from the market's perspective, on the banking perspective, interest rates, but we can also look at those technically, of course, if we decide to go for them. What else we can do is we can have the USD JPY pairs and just draw a couple of lines on that one as well. We see that the dollar yen has also been moving up over the past few hours, and this is, as you will see, is opposite to the euro dollar, what it should happen actually with euro dollar, because they are inversely correlated. But this is not the case, because of the past few days, despite the fact that the dollar is weak, the yen has also been weak, and this is helping actually dollar to gain some profits, to gain some extent or higher. So we can see drawing a Fibonacci here on the downtrend, what our first level close to reach actually is 110.08 going up, and very close there 109.73 going downwards. This is on the hourly chart. Okay. As for the extension of this Fibonacci, we can look at what levels actually coincide. Over here, we see the second extension at 109.83 is exactly 89 is exactly where the price is actually right now. And down here is another level that coincides. So we could also draw a couple of lines over here. Okay, so that we make that a little bit cleaner. Okay, to watch. Now, what I think we should do is, okay, technically speaking, we have identified the levels. What we can do is go on the Forex calendar and check out the previous results, okay? So the non-farm employment change, here we are. The previous report did come out 42K worse than expected, and also 80K lower than the previous report, okay? But the previous report was also revised up from 228 to 252K. And that was the main reason of the euro dollar reaction, okay? Now, divergence between the two previous economists' forecasts was 8K less, okay? And today's expectations are only 9K less. So that's 190 minus 181 drops less. Now, I think this expectation is realistic, okay? But I believe revisions are also in play, as this 33K divergence seems not much big, but a little big to me. So we may see an upward revision of the 148K jobs added last month. Please don't forget about the revisions and also the conflicts, the unemployment rates, and also the average hourly earnings reports could impose. Okay. Now, there is also the Economist, actually, there was 83 estimates, okay? The highest estimate is 245K. The lowest estimate is 140K. Now, this is a standard deviation of plus and minus 21K, okay? And it's up from the 18K deviation last month. Now, don't forget that the wages, let's scroll this a bit. Don't forget that the wages picked up slightly, and the jobless rate also held at the lowest level since 2000 for a third consecutive report. This is the unemployment rate. Okay, you see at 4.1. And this is adding to signs of a full employment economy. Okay, while the average hourly earnings increased by 2.5% from a year earlier, after a 2.4% gain in November, and that was revised downward. Let's check. Yes, it was revised downward from 0.2 to 0.1. Now, when we're looking at the NFP, there is a lot of components that we can look to give ourselves a little bit of a good idea, some signs, some clues of what is going to happen. Okay, one of course is the ISM and the non-ISM manufacturing PMIs, also the previous NFPs. Okay. Now the ISM, when it's the employment component is up, this can signal a good NFP. Okay, but know that economists expect a weaker NFP. Okay, see the result, see the expectations. Okay, 252, 181. So they expect a weaker NFP. So we could get a number that drives a dollar lower. Okay, now look at the latest ISM manufacturing. Fell 3.9%. Okay, the non-manufacturing employment also fell. Okay, we can have a look at those in here. So ISM manufacturing, this is 59.1, but this is the actual PMI. Okay, what we want to look is we want to look at the employment component, not the actual PMI. Okay, so both the ISM manufacturing and also the ISM non-manufacturing component have fallen. Okay, now the jobless claims came out better than expected yesterday, as we all have seen. Actually, quite much better than expected. Where is this? CPI. No, we don't want this. We're looking for the unemployment claims on the US. That was on Thursday, yes. So unemployment claims 230K instead of 237K, okay, which is good for the US economy. But we didn't see the dollar rising, and I will explain why in a minute. Now, so jobless claim came out better than expected. The previous figure was also downward revised, okay, just 2K. The 4-week moving average also decreased 5,000 from the previous week's revised average, which is also good. Now the ADP report, which is the ADP, it's just the NFP report that is coming actually from different statistics provider. The ADP came out on Wednesday, and this also came much better than expected. But the previous result was revised downward 8K. Okay, now I won't go into much detail. You can look also at the Challenger report, which is the jobs cuts report, and get some hints for yourself. Now, how is the market positioned? We need to go back to our charts, and we're gonna need to add a Bollinger Band here. Okay, Bollinger Bands give us indications about the volatility of the market, and also how liquid the market is as well. Now, we see a little bit of a squeeze here on the market, okay? The squeeze of the Bollinger Band. This means that there is not a lot of liquidity in the market at the point because everybody's actually waiting for the release, okay? Now, don't forget, I did mention that USD JPY is always the purest pair to trade the NFP, but don't also forget that the interest rate differentials can provide good clues on what other pairs to choose. Okay, if you don't want to go with the big volume ones. What else we can do is check the Treasury yields. Okay, so for example, if we go on CNBC, we see that the yields are high today. Now, if they're pricing, if the yields are going up, this is this is pricing in for a good NFP. Those actually started going up. This is on a yearly basis. Let's go on a 5-day basis to have a better view. Now we see we speed going up, okay, and this is despite the jobless claims improved, okay, and this is because the investors' expectations, investors that are outside the US, they are now higher for inflation figures and also for the US growth. Okay, we can also look at the oil because oil inflation depends on oil. Okay, when the inflation is up, the interest rates are low. Oil has fallen over the past few days. Let's go have a look at that. US oil, WTI, yes. So we are on the hourly chart here. So it has fallen over the past few hours, okay. Probably for a correction, we had this correction, a very nice correction over here. Nevertheless, this could be a good a signal for a good NFP, as when the economy accelerates, the oil becomes more expensive. Okay. Now, generally, oil prices are high, despite the fact that we had a correction, and on the short term, they have also, they also increase. So short term, what I'm saying is the last couple of days. So from this correction point up to the very close to the multi-year high. We can also look at the stocks. Actually, I have the SPX chart here. The three biggest indexes in the US, if they are down, and this is actually a chart, but we can see the level of high, so that we can see how much they've all dropped over the past few days. If they are down, this is good for a positive NFP number. Okay, we did have a tumble over the past few days on global equities in general. Okay, so this may be a good point for NFP. Now, if we want to talk a little bit about reasoning, so what is the argument for today's NFP? So what else is it that you need to go through? Okay, so what we want to do is separate the all those items we have just identified, okay, as the oil, the Treasury yields, the S&P, the stocks, the oil price, the ISM employment index, even the US yields. We want to we want to go for the good and for the bad for the NFP. Okay, so we did say that we had some good arguments. One was that the ADP NFP report was better than expected. Okay, then this is by 48,000 jobs, which is a very good indication. This one. Now the jobs cut report was also good. Okay. The nation's employers announced plans to cut 44,000 jobs. Okay, to cut. Actually, no. This is a bad component. It's not a good one. I apologize for this. It's quite a lot. So it's actually more than in December, and quite a bit more than in December. Now the unemployment claims. The unemployment claims also came out yesterday. We said that they come positive, okay, but we had a downward revision. The 4-week moving average of the jobless claims also decreased, which is good. And if we're looking at the dollar index, US dollar index currency, it's also been, actually, why do I think this is not US index? Dollars index. US dollar index. Okay. Okay, this is the daily, so we cannot see this. 1 second. US index. Let's go back on that one. On the daily, let's look at the hourly. So it's trying to get back up. Okay. But generally speaking, it is down. Okay, generally speaking, it's fallen quite a bit, but this morning it's been heading up. Okay, so this is also good for a positive NFP. Now, the bad components, the bad items we looked at was the ISM manufacturing PMI and also the ISM non-manufacturing PMI. The employment components in both reports were down. Okay, and also the consumer sentiment is down. If we look at there we go, the previous result. The revised University of Michigan consumer sentiment is down, as well as the consumer confidence. We need to have a look, and this is the CB consumer confidence that we go on Tuesday. This came actually out better than expected, so this is a good sign. Okay, and we also had an upward revision on this, so this is also a good sign. So when we are looking at positioning ourselves for NFP, okay, I want to stress again that we do not just look at the headline number, okay? Don't just look at the headline number. It is important, of course, but it's not the only item we need to look, okay? We need to look at how many revisions there were and how much so we had mainly, generally speaking, if we go on the NFP, most of those revisions have been downward. Okay. Now, notice that the biggest NFP number for last year was 252K. Okay, 252. I think I saw this. Oh, 261. There we go. This is the biggest one for last year. And expectations, the highest was at 312. There we go. So the November release had a revision of 20K. It's not big, but anything below like 30, 40, or 50K is significant. Okay, so the focus should be on the headline, of course, but as well as the average hourly earnings. Okay, as unemployment rate is supposed to remain unchanged for another report. Now, as long as the NFP comes larger than 181 and the hourly earnings are above 0.2%, we could see a rally towards, let's check again, USD JPY. We could see a rally towards 110, which is very close actually. And this is another level, 110 to 20 pips higher. Okay, and even 245. That's for the euro dollar. The euro dollar, we could go at 245 downwards. Yeah, which is also the Fibonacci. So we can. This is just a zone. You know, we could see price moving down there if the NFP comes out better, or even lower. Now, if the report is mixed, we will see whip shows. Okay, moves may be limited, of course, by the technicals. Now, a headline divergence that is over 50K is significant for me. Okay, so anything below this, anything below the 50K is not too significant for me. Now, you know, according to the pros and the cons that I have just actually spoken about, I personally believe that that should be a good headline number in terms of the NFP. Okay. Now, in terms of positioning yourself, it's always better to wait for the market to settle. Okay, and wait for at least 1 hour so that you understand the directionality of the market, because you might see a good headline number, but the dollar actually reacting in the opposite way. The definite thing is that you will see a breakout. Okay, let me just take this out so we'll have a clearer view. You will definitely see a breakout of the Bollinger Bands. Okay, we have drawn our support and resistance levels. We have drawn our Fibonacci's. Okay, we could also draw it on a different time frames, but we really want to be close to what is happening right now. Now, what I want to stress also is the fact that if you're positioning yourself for NFP, you need to be very careful about your stop loss, your take profit levels, and also your appropriate size. Okay. Now I think there is another minute or so left for the NFP to come out. Maybe we can switch or just refresh. A few seconds left for the release. So according to the arguments, I am expecting the figure to come out at least 181. Okay, personally, and I'm also expecting the 148 to be revised upwards. I expect the unemployment rate to remain the same. The average hourly earnings may also improve, but I'm not too sure on that one. This could also remain unchanged to 0.2%. Okay, so we will see all that in just a few seconds. There's not much of a move for the moment. Probably there's not much out so far. We don't need those. We can close it. Okay, so we see the first move downwards, which for what we see, it means that the NFP came out better. But this is just the beginning. Okay, there we go. So, as I anticipated, the NFP came out better than expected. The unemployment rate remained the same. The average hourly earnings from 0.2 to 0.3. I was expecting this either to remain the same or move up. So my predictions are pretty accurate, and I'm happy for this. Now, in terms of what's happening now, we see a first down move from 125 down to 124.6. This is only 30 pips. That doesn't necessarily mean there will be a down move, a further down move. It doesn't necessarily mean actually anything. The headline numbers, of course, are traded, and this is what happened in this specific move. But now we start seeing the whip show effect. We might see the euro dollar going all the way back up here. Okay, we never know. This is why this is the riskier event to position yourself. Okay, also don't forget that if you are in, obviously, if you have your stop loss positioning and your sizing correct, then you shouldn't be much worried. Okay, let's have a look at the euro dollar, at the dollar yen. So dollar yen, well, we see it's actually, oh, hold on, what was the one that we've identified? Was it FXM? There we go. So exactly at our level, okay, dollar yen. So it broke this one because it's positive, and it's just moved up higher. Now the dollar yen pair is moving with more force and more momentum, and actually more in pips, in terms of pips. Actually, it's over 30 pips right now. 40 actually, sorry. Because of the reason I mentioned earlier, because the yen has been weak over the past, actually within the week. Over the week, it was just uneventful. It wasn't much on the yen. There was some sort of neutral to bearish sentiment, and that is why we see this up move now. Now, going higher, we could get to this level, which is 110.5. But obviously, this is not something that we can anyone can guarantee. Okay, the important thing is that the first level has been achieved. This level was identified correctly as well. If we go back on euro dollar, let's see what's happening there. That was not the one I had the lines drawn. That was probably here. There we go. So there is a chance that this will go to 124.5, which is a good psychological level as well. So another 10 pips down, it could be possible. Now the thing is that we don't know if this is going to carry on going downwards or upwards. Okay, it may reverse, it may just break more this support and go lower. This is why it's very important to wait for at least an hour after the NFP to have any clues on directionality. Now, while we're watching the charts, guys, please feel free to ask any questions. Okay. So I'm ready to take questions and answer anything actually you would like. Video for this session. Let me just take this on the side. Edwin, yes, it has been recorded, and it will be released probably on Monday onto our YouTube channel. Okay. If you go on our YouTube channel, you can also see all other recordings, not on NFP only, but also all the videos, all the webinars I have actually done so far for FXPRIMUS. Guys, I'm ready for questions. If you have any questions, please feel free to ask. This is now the time to do so for another few minutes. So looking the report, the employment situation report from the Bureau Labor of Statistics in America, we had 200K in January. Okay, let's see. Was it a revision? If there was a revision, okay, there we go. I did also expect a revision of the 148. This feels quite good. So everything was spot on today on our prediction, on my predictions. So I hope you were, if you were in the markets, I hope you were able to act accordingly and correctly without mistakes. Now, going back to the employment situation report, we had a 200K increase in January, unchanged unemployment rate, and the unemployment continued to trend up. Okay, mostly in construction, food services, in drinking places, in healthcare, and also in manufacturing. Okay, what about labor force? Let's have a look. Labor force. Okay. Okay, those are the revisions in total non-farm employment from January to December 2017. This is a very good table to have a look at, to have a look into for the next NFP next month. So this is the publication, this is the revision. So the difference is this. Okay, and over the month change. Now, if you add all those numbers on the difference, and you divide them by 12, you get a moving average. You get an average of the pretty much how efficient the economists are. Pretty much, from what I remember, I've had a number for this, which I talked about earlier, and it was somewhere around 30K or 40K or something like that. Jayadev, please ask the question you have. Please feel free. So it's important to look at the difference. Why? Because when you're looking at the headline number, you can assume that there might be an upward or downward differential between the actual and between the forecast and between how wrong or how correct the economists are. And this, from what I remember, I think it was, hold on, I have it somewhere written. I had it written somewhere when I was talking about the votes. One second, let me just do a search. Okay. So that was 21K up or down. Okay. So the question is from Jayadev, how long should we wait for take profit after the release of NFP? Jayadev, it really depends when you enter the market, okay? And also it depends on your risk appetite and your goals as a trader. So what is your daily profit or loss target? Now, to give you a more specific answer, I will just give you a couple of scenarios. It's not about time, okay? If you trade short term, which means for 5 minutes, 1 hour, or whatever, you should be looking to take pips rather than looking at the time, okay? So you can take 20 pips, 30 pips, 40 pips, or wait for even more. The problem is you never know what you're going to get. Now, normally, generally speaking, when we're looking at the NFP, we have at least a 20 to 30 pips move average, okay, on either pair, 20 to 30. So I would say that 20 pips is normally a safe approach if the headline number, of course, goes towards your direction. Now, if it goes against you, you know, obviously you should employ your stop losses. You should have them as well there. How much time will you need for the volatility? Well, volatility will remain in the market for at least the next hour. Okay, without that necessarily meaning that there will not be any volatility after. There will be some volatility because after the 1 hour, there's a lot of people trading the NFP. Okay, there is a short term of the scalpers or the ones that they just go in the market quickly to get some profits. Those are the ones who trade the headline number, and also there is more with less risk appetite traders that they will wait for at least an hour to see where the market is heading, and that way they can predict actually the market move with a better idea, okay, more efficient. Does this make sense? So going back to the employment report for the month of January, this is the exact number of added employees, unemployment rates. Okay, this is on November, December, January 2018. So if you look at the previous year figure, the unemployment rate has fallen a lot. If you look at the employment employees added on the workforce, we have only a small increase compared to last January. Now this means that the economy is going into full employment, okay, which is of course good, but not necessarily, because there may be no workers in a few months to actually work for the economy in general. So we might have businesses being very willing to employ and not being able. So that could create a problem, of course. So a question from Jayadev, basically all positive NFP remains to rise in USD per. I don't understand the question, but if you're thinking that a positive NFP means that all dollar pairs would rise, this is not necessarily true. There's been times where I will have seen the opposite, a positive NFP and the dollar falling, or vice versa. It all happens in these markets. So that's why it's important to always wait. If you want to enter a trade, to enter a position, it's always better to wait for the market to settle. Okay, any more questions, please, guys? If you don't have any more questions, we can close this off for today. I will wait for another 2 minutes just in case someone wants to ask something. In case you're watching this on the recorded, under the recording, and you have a question, you can feel free to email me at my email address. Also, feel free to connect with me on LinkedIn and follow me on Twitter. I post interesting stuff on there on a daily basis. So there's always something for you to take. Going back to the employment, this nice table I was watching earlier. Unemployment rate from 4.8 to 4.1. People lost their jobs less in January 2018, so this is good. Duration of unemployment has fallen, which is also good. People that work part-time, they're also less, which means more people actually change from part-time to full-time, which is also good. Labor force, okay, not in the labor force, okay. 1752, 1653. So there's a lot of things, and also this is a comparison table for the industries, okay. So going back to the chart just before I leave, we see the euro dollar pair moving towards the 125 level, 24.245 actually. The dollar yen, I'm pretty sure it's probably passed above the previous level, even falsely. There we go. Okay, so it's above 110, and it's probably going to head to 110.5, and maybe even 111, because yen is weak. Okay, so we should be looking at this closely for the next hour or 2 hours, see if there will be a rejection on at some level, or if there's going to be a reversal at some point. We should expect a dodgy candle, indecision candle on the 1 hour chart. Okay, this candle is definitely going to close on a positive note at the end of this hour, which is only 13 minutes left. Now, the next few hours will tell us what is going to happen in this in a short to medium term. Okay, now I see no more questions. I want to thank you for attending and for watching. This will be recorded. Feel free to email me again if you have any questions. This is my email over here, and have a nice weekend, all of you.